in beautiful Chicago, Illinois, the handsomest city in the world. I'm Sebastian, Chief Operating Officer of OptionPit.com and author of the new release, The Option Traders Hedge Fund, with your Mr. Top Step morning update. Well, last night we saw S&Ps up relatively big on the news that the conservatives, New Democracy and PASOK, had won enough of a majority to manage to stay in the bailout package. Well, we quickly gave all that away. We were actually down somewhat significantly this morning and looked to be heading really south. We've since flattened up. When you get a flat market on the hind end of news, what happens? Well, volatility comes in pretty significantly. Here we are on a Monday when the VIX should normally be up about 0.8%, and it's down about 1%. That's a pretty significant move. I'm going to be really closely watching this VIX. Can it break 20 and hold? If it can, well, then we may have a June, at least the rest of June, that eases. All right? If not, and I'm going to be watching this really closely, I think this afternoon is really going to determine things. After the European close, are we going to see people come in and buying equities, or are we going to see equities sell off? Well, if we looked at bonds and FX, bonds are up, notes are up, FX, US dollar is up. None of those point toward a higher market. It's going to be very difficult for the markets to rally this afternoon. So what does that lead me to think? Well, let's think about what happened with Spain a week ago Monday. We were up big overnight, opened up a little in the morning, and then had a nice, significant sell-off in the afternoon. We may see something similar to that today. Not 100% certain, but entirely possible. So how do you play it? Well, you've got to have two opposing views, all right? If you've got the view that we're going to kind of do nothing for the next couple of weeks, which is entirely possible, I think an at-the-money butterfly in the S&P futures options could be an excellent play, all right? If you are of the view that something that we're going to move this afternoon, well then, a play that could make some sense would be some sort of longer volatility play. And something along the lines of a back spread for a credit, where we sell one at the money and buy two out of the money and receive a credit. That will kind of depend on skew. We'd have to look at how expensive puts are relative to at the monies, but that could be an entirely effective play. So what am I expecting? Well, you know, I'm leaning toward the possibility of a major sell-off, but my radar has been way off the last couple of weeks. So I would be leaning short with a very, very tight stop. That has been a very effective play for me over the last couple of weeks. I've been wrong more than I've been right. But if you allow for a very tight stop on being wrong, you end up in much better shape. Plays that still work. Now that the Greek elections are out, I think we may make it the next 30 days without a massive blow-up. So our Condor play in August also could make a lot of sense against any kind of futures trading. Now, on a personal note, I want to thank the Mr. Top Step guys for having me do a webinar this weekend on the weekly options. It went great. It was great seeing everybody. You can catch a replay at the Mr. Top Step website. So, from the floor of the CME Group, again, the handsomest in Chicago, Illinois, the handsomest city on the planet, I am Sebastian, Chief Operating Officer of OptionPit.com, author of the Option Traders Hedge Fund. This is the Mr. Top Step Update.